How bullish are you?
Well, in a word, optimistic, certainly. And China is one of the markets that we have been and remain overweight, both the offshore so-called H shares as well as the onshore A shares. And performance so far this year has been pretty good, although it's been bumpy. Very strong January, gave it all back in February, and then kind of grinding back up in March, and a decent start to April. But I think the recent data flow, Rish, which you just mentioned, is supportive. I would just highlight yesterday's trade data, which was very, very strong, well above consensus, but we and the market were expecting. And it certainly suggests that first quarter growth is strong, and we raised our China GDP growth numbers about 3-4 weeks ago from 5.5% to 6% for the full year. And that we think will drive earnings growth this year up to about 17% for the MSCI China index. And with the market trading at about 10.5, 10.6 times forward earnings, we think that combination of earnings growth and continuing low valuation is a pretty compelling cocktail for investors. So that's really the essence of the investment view in a nutshell.
All right, what about this thesis that you have at the moment? There's a second quarter for Asian equity markets, and I'm presuming that you're also including China in all this, tend to be, it's a quarter of mediocrity. Why is that the case in your view? And so therefore, how is that also part of the way that you are really the moment framing things?
Yeah, that's exactly right. So, we do need to pay attention to history, although the seasonality of market returns is not necessarily a determinant of things, but we do need to pay attention to it. And just what we did is a very simple exercise. We just looked at average returns and median returns for the region as a whole in every single market over the past 10, 20, and then 30 years. And what's interesting is that notwithstanding the very significant change in the composition of the markets, like, for example, you didn't have a Tencent or an Alibaba or anything like that 20, 30 years ago, but the pattern of returns has actually been quite consistent. And in a nutshell, what we see is that for the second quarter as a whole, returns, frankly, aren't great, sort of mildly positive with a sort of an okay success ratio, but not fantastic. Drilling into the second quarter, you tend to have a good April and then a poor May and a kind of a flat June, and that would lend some credence to the age-old Wall Street adage of sell in May and go away. And more broadly, if we look at the quarterly returns during the year, first quarter tends to be okay, second quarter, not so great, third quarter the worst, and fourth quarter by far the best. And that would suggest that the sort of 6 months from May on are typically weaker parts of the year, and then a stronger recovery. Broadly for the region, we think that's actually a narrative that plays pretty well. We're thinking that earnings growth for the region as a whole is really going to accelerate into 2024, and the market will start pricing that as we get deeper into the second half. China, we think, is slightly different because we obviously have a much better near-term recovery. So that's part of the reason why we think that China returns may be somewhat better than the more backloaded returns for the rest of the region.
Korea's been going great guns, and in fact, it's nearing a bull market right now. What's your feeling on that? And also, let's also look at the IMF suggesting that we could see China and India, and going to have a look at the latter there, powering half of the world's growth through 2023. Thoughts?
Absolutely. So I'm glad you spoke about Korea, because we're also overweight there, and we've been quite bullish, and sort of happy to note that in local currency terms, Korea is actually the best performing market in the region. The won has been a bit weaker, so that's taken Korea down and just slightly below Taiwan. But our overall view has been a North Asia bias this year, which basically is reflected in both China and the North Asian economies of Korea and Taiwan. That's kind of where our preference has been, along with Japan. So far that's pricing pretty well. To get to Korea specifically, I think that the story here is that the market is looking through the near-term earnings weakness. I mean, paradoxically, Korea's going to have the worst earnings growth in the region this year, probably down over 30%, really led on the downside by the semiconductor companies. But then we're going to get, we think, a very significant bounce back with earnings up 60% next year, which is that very significant bounce back in profits from the semiconductor companies. Now, the market clearly is looking through things, and we're probably going through the worst part of earnings for the semiconductor companies in the first quarter, in the second quarter, and things are incrementally going to get better in Q3 and Q4, and then into the early part of 2024. So I think that's what the market is pricing. And then if I could, I just would note also we've got this out of consensus view that there's a decent chance that Korea could be added to the MSCI watch list for an upgrade to developed market status in the annual survey that they do, report that they do, which will come out the last week of June. So that's actually one of the catalysts in this quarter, the second quarter, that we think could be to Korea's benefit on top of the fundamentals that I just summarized.